Yes. You hear me? Yes. You hear me, bro? Yeah, yeah, yeah.
All right. So we'll start off some live trade examples I had from yesterday and today. So for yesterday's trades, it's the same setup, ABC. Now this one was not ABCD. This one was another setup. So we won't even go over this. We'll go over the ABCD setup. So this was my yesterday's trade. So it was a momentum continuation trade.
Yes.
So this was the exact trade over here, and we'll start off with the higher time frame, like why I was entering. So as you can see, yesterday was super bullish, and then I didn't want to fade the trade. So basically, the market had gone up to here, and then it had come down a bit. So I knew like there's no point of selling it because there's so much buying pressure, especially with this wick over here and this. So I was looking to catch like a small move. I wasn't looking for a big. It happened way bigger, but I was just trying to catch a little move.
Yeah.
So we had this candle fill up, and then it broke down, and that's when I drew my Fibonacci on the smaller time frame. So I drew my Fibonacci. You can see this Fibonacci right here.
Yes.
I drew it from this swing low. So I think it looks better on the 30-minute. Yeah, so on the 30-minute, you can see from this swing low. So it's like market had a little pullback to here. So I drew it from this wick right here, all with the top wick over here. And then I had the Fibonacci level set up, 61.8. And then I had the other levels here too, but it stopped right on 61.8. And this is also a supply area from the past. You can see from this doji over here.
Right.
It was like perfect. So price literally broke above it, retested it, and then it flew up to this supply area. And this supply area had become a demand because once we came back, I saw that the market on the 30-minute, like it first formed a doji, and then so I missed that entry. That was right at 9:30, and then it formed an angle. So this pattern right over here is a evening star pattern. You know that, right?
Yeah, right.
I mean, morning star.
Yeah, morning star. Yes.
Yeah. So once it pulled up, I was looking for a pullback to enter again. Like I would have entered even over here somewhere, but I missed it. Like I was literally just being patient, and then it just flew without me. And then I went on the 5-minute. I was trying to catch a pullback entry, and so yeah, once it broke above, I saw this doji form over here, and I knew that this was the previous weekly low, so it'd come back.
Yeah.
And it came back right around here. So I was looking to buy right around somewhere here whenever some doji forms to show exhaustion. And this is also a small time frame, head and shoulders, like shoulder, head, and shoulder.
Yeah.
So right when this doji formed, that's when I bought it. So the trade was actually right over here. So right when the doji formed, it actually just flew up to profit. But I closed it right at the green box. So my risk reward was 1 to 5. That's my target. But I closed it right around here, around 1 to 4ish, 1 to 3.9. Like it was exactly 1.4. I closed it. So, but had I held the trade, and I just like now what I journaled was for one of my errors for this trade is like if I put the EMA 8, I should have simply put my stop loss maybe to 1 to 3, or even 1 to 2.5ish, right around here. So that way I would have secured 2.5 profit. So I would have, if it hit stop loss, I would have maybe like hit the stop loss at profit. I would have maybe lost 1.5 in profit, potential profit, but then I could have extended my TP a lot higher. Where the hell this should go?
Right.
Yeah, so I could have extended my TP. It literally would have gone in like fucking 1 to 20. If I held it to this zone, that would have been 1 to 20. But even if I held it like 1 to 10, within that same 4-hour candle, I would have got like 1 to 15 TP. And then if I held it even longer, I would have been 1 to 20. So I would have made way more profit. But that's just a lesson for me because the stop loss for this trade was very tight. That's why the risk reward is really high. It was only 4 pips because like all the confirms were there, and then Doji gave me a very tight stop loss.
Right.
So that was a trade. That was a Fibonacci trade. It was a momentum trade. And then this was my trade from today. Today's trade on your GBP I lost. But nonetheless, we'll still look at it.
Yeah.
Just because it was following the plan. So I basically drew another Fibonacci from this low to this high. Because first we drew it from this low to this high. Now I did it from this low to this high. This is the next move. And price came right around this 50 fib level, and you can see it exhausted here once, and then exhausted here twice. Right. So this is a 50 fib level, but it was also a A-score zone by the green line. And so because it exhausted right
Alright, so basically the video stopped, the audio just stopped right around here. So I'm just going to continue off with where it left and just try to go through whatever I can understand from the video. But yeah, let's just go and see. So this is a 1 to 5 visual trade. Just keep going a bit forward. Yeah, so you're looking at exactly what I'm looking at. I don't really know what's going on at the moment. But what I can see is there's a stop one. So even though you lost the trade, you could have maybe even entered post after this and then caught another entry. But it didn't work out. But it's obviously good to wait for that rather than to enter before that. It's better to always wait and take that loss on the chin after the doji stop hunt rather than entering before that, which I did in this scenario. And yeah, just keep going. So let's see what pair we're gonna do now. So now, yeah, we're looking at GBPAUD, and then we're on the H1. We draw our fib from the bottom of the move to the top just to see the first swing high, and yeah, so we can see it's right on the 78.6, 88.6. But what I was saying was this is not that clean. It's very choppy. Like it's also like a reverse shoulders, reverse head and shoulders, shoulder head shoulder. So you could get an entry off of it, off of this doji, but it's not as clean. It's better to wait for like the break of this TL to the upside and catch like a cleaner move. That would be the better entry in my opinion. So let's see the next fib I draw. So I think I go to the higher time frame, and you can even see that this is not that clean. So yeah, I think I was showing the guy how I draw zones. I'm not too certain. Let's see what happens. Yeah. So I basically use a 50 fib. I basically I like to find areas in between lines. So you can see this line over here and this line over here. I'd like to find the middle point. So I'm just gonna pause there for a second. You can see the price comes down, goes up, price comes down and goes up. So right in between here is a good zone. Same thing in between here because price, comes up and then you'll draw a line here, and then once you go back to the candle chart, you'll see the wicks will be tapping that area. So I wouldn't draw just based off like weak ones. Like this is like a weak one right here. You could draw one off this. It's kind of weak. I prefer the structural ones, which are like maybe like this and this, even like this one right here. You can see if you just imaginarily draw a line right across, like the first tap on it, it flew up right off of it. So these zones have lots of liquidity, and there will be a lot of flying movements off these. So that's why I prefer these zones because they're generally stronger. And I use a 50 fib to make it exactly precise. Like sometimes you can just estimate it, like around here it's pretty sharp, so it's easy to estimate, but like this is a big gap. So I draw it from the low to the bottom, the high to the bottom, whatever, and the 50 fib, and I put my zone right there. So that's why I like to draw zones. And this is mostly like I'll draw supply and demand zones based off wicks and stuff as well, but I just go through this and add the prevalent ones. And you can see the ones we drew were based off the line chart, but when you go to the candle chart, you can see that it's literally wicks to the T, like the wicks to the T, wicks to the T. So it's literally a very liquid area, and because that's why price is tapping and flying, tap and fly. You can literally see everywhere, like tap, fly, breaks above, tap, fly, tap and go. So it's a very precise way of drawing zones rather than drawing zones like maybe in between here or some shit. It's not as clean, a lot of it's very choppy. Rather you get clean ass zones off this. So your stop losses can be very, very tight. Entering off one of these zones, get some small time frame rejection. And yeah. So let's just go on and see the next pattern that I draw. So I drew a fib from the bottom over here to the top over here. And you can see that price consolidated between the 78.6 and 61.8 fib, and it made a reversed head and shoulders pattern. And this reverse head and shoulders is also aligned with this H4 zone, so it's like a triple confirmation. So price failed to break through. Once again, made like a morning star pattern, came up, pulled back. So you could have entered even somewhere off here, kind of like double bottom off this. But even if you waited, you would got an even better entry on this right shoulder. And it's a 30-minute head and shoulders, but on the 15-minute and the 5-minute, you would get an even precise entry. So we're not entering based off the 5 and 15-minute, but we're entering off it, but that's not solely. Our idea is based off the higher time frame. So we got our H4 zones, then we got our H1/M30 fib zone from point A to point B, pulled back to point C. So then it's a lot of confluence. So like we got our zone, we got our ABCD, we're at point C, we got our reverse head and shoulders, and then you can even enter off like this morning star or even like off the small time frame, there's probably some better confirms, but simply based looking off this is the right shoulder. So even after this one formed, this confirmed that this rejection, so this candle, inside candle confirmed that the rejection of this level. So you can enter somewhere off here. I would likely enter somewhere here off like the 15-minute or 5-minute time frame. just knowing that it's a M30 rejection. And my SL would be tight, maybe right around here or below this wick. I want to be safe, and my risk reward would be at least 1 to 5. And let's just see what happens. So, and then yeah, this is our second option. So yeah, I was talking about this trade where it's like, suppose you do miss this trade, you can once again add the fibs again, add the fib from the bottom to the high, as I did over here from the move, and then you can see price comes down right to the 61.8, and this is also a demand zone, because you can see first it was a supply zone, like literally price came up, dropped, grabbed liquidity, and flew up again. So we know that there's liquidity trapped over here. So price came back to this liquidity zone. People call it order block, some shit like that too, but liquidity zone, order block, whatever the fuck you want to call it, it is what it is, right? So yeah, yeah, that would be a solid trade. Pretty tight SL, below structure, and then my target's always 1 to 5. Like I don't target more, you don't target less either. I mean, I never target less, but I usually target minimum 1 to 5, sometimes higher. But yeah, 1 to 5 would have done just the magic number in this area. Literally 2 TP, and then a reversal would have occurred. But even once it's at 1 to 5, suppose we're floating around here, I might start booking profits as soon as I see the doji exhaustion and stuff like that. Or a worst case scenario, I'll put my my stops automatically go to break even once I'm up 1 to 5. So just looking at my basic eye, so like once price was around here, I'll be at break even, and then once price breaks above this, pulls back, continues, I'll probably put my stops below this. I'll even maybe use EMA and trail to stop. But yeah, this is a clean 61.8 trade. This is like a morning star right off 61.8. You would have a clean confirmation, and yeah, that'd be a sniper trade. Let's see what else is there. So yeah, I think I drew the EMA as well, so you can see what the hell. So you can see shit man, where the hell is it going? Okay, so yeah, you can see the EMA, whatever, fuck. You get the point, man. The I'm using EMA 8. So oh my god, this shit keeps. It's kind of annoying. Or whatever. Yeah, we'll screw that shit. Or like you can just whatever. Our pause. Bless. Finally we got it. So yeah, maybe after price came back and touched this and flew up, I would just trail my stop loss maybe here once it keeps flying, and then maybe right here after this last wick grab. If I was live, I was active, I'd put my SL right below there, and then boom, we would have got smoked. But at least I would extend my TP as well. I wouldn't just keep my EMA there and then have my TP there. No, I'll extend my TP to 1 to 7, 1 to 8. And yeah, it is what it is. Let's just go. But that's what you always want to take. You always want to book profits at your target levels. I would at least, to be honest, I'm booking profits personally at this level. But like, you can also trail stops or maybe close 50%, trail the rest. So I'm working more on that as well myself. But for now, I just book profits and secure the book. So let's keep on going. Let's look at our next trade idea. So yeah, right here as well. From this swing low to this swing high, we drew. Now to this swing high, I drew the fib. So you draw from this swing low and not this swing low or any of these swing lows, because we want the most recent push. So the most recent push was off this zone right here, and literally price flew. So we knew that there's buyers waiting around right over here. Somewhere here there's buyers, right? So we draw it off this push to this high, and you can see price comes down. This is why I don't use the 50 fib or the 61.8. I mean, my bad, the 50 fib or the 38.2 as frequently, just because like I'll use a 50 with a lot of confluence, but I won't trade 38.2 simply because you can see the price would come down to 38.2, fly up again, 38.2. So it gives you a lot of fake confirmation, whereas liquidity lies at these lower fibs. And you can see from this doji over here as well, like this doji grabbed liquidity from sellers, and then boom, they filled it up again. So this is sort of like a supply area as well, and you can see price came down, broke right below. This is the H4 time frame, right? So there's probably better confirmation in the smaller time frame, but you can see price came down to 61.8, and from here a big ass bull rally. So that would have been a clean trade. These are the type of trades you want. These are like the money makers, like straight to profit. So that would have been optimal. I would be just waiting. I'd be getting a better entry off the H1 or the M30. Let's just go to the next idea. So I think this was the zone. So yeah, you can see there's like M30. There's like the morning star, and then morning star confirmed. So then like first you can see these two dojis. So this shows the price is slowing down, and then the morning star pullback. So you could enter like as soon as morning star is confirmed, you could even enter over here and then wait for the pullback. It's even better. But even if you're entering off here, SL here, you still get 1 to 5 risk reward minimum. And this looks like on the 5 minute, this might have been like a head and shoulders, like shoulder head. So it's maybe some sort of variation on the head and shoulders on the smaller time frame, but it looks clean off the 30 minute as well. It's not super clean, but it is what it is, right? And then once price breaks above the 61.8, that gives you even more confirmation. Let's go to the next trade idea. Okay, we're all right. So yeah, this was another idea right here. So from this swing low, it's like a triple bottom, and then price flies up. I'll draw the fib from the 8.8 to point B, and you can see this is another reason I use 61.8. This is the 50 fib. So 50 fib, you might have had a 1 or 2 trades, but it's super choppy, so it's not even all the way extension, right? Whereas 61.8, once 61.8 is stopped, it goes on all the way to extend all the way to make the new leg. Whereas over here, it fails to make the new leg. That's why I prefer 61.8. This is a 30-minute, so there's not that much clean confirmation over here, but maybe on the 15-minute or 5-minute, you would have got a clean confirmation. And you can also see this is a supply zone because price flew up, came down, and flew up off this level right here. So you can see there's liquidity lying over here. And once again, the same liquidity was tapped. Let's go to the next idea. And once again, another clean move. So from point A, so makes the first leg, and this is the second leg. From point A to point B, you draw the fib, and you can see this is once again liquidity area from the doji. Just shows like price slowed down and then boom, flew up. And so the fact that it flew up from this area makes it a supply zone. You can see price comes down. Beautiful confirmation on this one. This doji stop on, and then once again this candle fails to break it, and this candle fails to break it as well. It forms like a hanging man. So right after this hanging man would have been a beautiful entry. Stop loss right below here somewhere. And yeah, you would have got like, since it's a hanging man, your stop loss would be pretty tight. So you would get 1 to 5 risk reward. Worst case scenario, you'd be hit at break even, and maybe if your TP was a bit higher, you could at least, I would have at least booked some profits once price slowed down here. You know, like 3 taps failure to break, I would at least book my SL below EMA or at least below structure, or like the best case scenario, I would most likely close my position and wait and put like maybe a stop order here, or wait for a breakout above this and then put my stops below here, just because I'd simply be risking the profit that I already closed. Let's go to the next idea. So yeah, you can see the TP would not have been hit 1 to 5, but it would have been a break even once I'm up 1 to 1.5. Put your stop where the orange line is, and then you would have got stopped out. But it is what it is, right? It's a game we play. You just gotta put the odds in your favor and take the most sniper opportunities. All right, another trade idea. So you can't really see the bottom; it's somewhere here because of this freaking play thing. So yeah, from the bottom, I do it to the top over here. You can see price came down. So once again, you can see this is a supply zone because price came down, slowed down here, and boom, we had a nice leg off here. So we know that there's a lot of liquidity here, especially since we tapped over here and we still had to move off that. So we didn't even have a clear breakthrough, but the liquidity was grabbed. So we know that there's definitely buyers over here. So we drew the supply zone, demand zone. And also we have the fib running. So it's 61.8. So you can see price comes down. Once like this kind of slows down, so that's decent confirmation. But once this one breaks below and then fails to break below and closes above, that shows me that the orders have been picked up. So that's a clean entry right off this. It's a beautiful entry. And then if you want to get like a better confirm, you can see this Morningstar candle forms, and you can enter off the pullback over here, stops below this level, and then you'd catch to go easily 1 to 5 because it'd be a tight stop loss. So let's go to the next idea. Yeah, so even if you had like a wide SL all the way to the bottom of the wick, you'd be definitely trailing your stop loss once you're up 1 to 1.5. So once you're about here, that's about 1.15. Just by looking at it visually, you'd be risk free. And then most likely, once you see like patterns of your price slowing down a bit, this engulf over here is sort of like it's like an ugly variation of evening star, and you can see this is also a demand zone. Like this is the key demand zone we're aiming for, but this is also demand zone. You can see price came and flew off, so you can see price rejecting this area. So this one may be a good place to secure some profits, or at least price stops below this area. And you can see price came back and then went back up, and then at least at this point for sure, if you'd be at break even like bare minimum. So at least around here, it's like indication that it's not breaking above. So that's definitely an area to close. But yeah, let's keep it going. Okay, where were we? All right, that was like an ugly example. Alright, we're gonna keep moving. Fuck this shit. Oh my god. So yeah, so I drew the fib. Bro, or whatever. Screw that example. We drew the fib from the bottom to the top. See, price came down. It did not come to 61.8, but it broke right to 61.8. It grabbed liquidity. So that's what I'm trying to fib. Because if you traded the 50 somewhere around here, you would think it's a decent confirm, then you would have got smoked. That's why I was waiting for 61.8, 78.6, or 88.6. So you can see, drew a fib from the bottom to the top. Price came down, broke through 61.8. And then you generally need some exhaustion around 61.8 for it to be valid, right? But there's no exhaustion. So this is also a supply zone over here. You can just draw right off this zone. So you can see price came up, pulled back to here, and then boom, next leg. So this is a very valid zone. And you can see that price came down, grabbed liquidity from the 78.6 to this is not enough entry confirmation, but once this hanging man forms, this is a decent entry. Put your stop right below here, target somewhere here, and then but suppose you miss this entry, you wait for this engulf, and then that you have your morning star form, so that gives you even better confirmation, and then you enter somewhere on the pullback handle, somewhere over here, maybe like right around here somewhere as a pre-sniper entry. You could obviously wait till it'll be here, but most likely you want to get in like right around here, because oftentimes it'll just pull back slightly and fly. And yeah, then once again, same thing. Once at 1.15, you put stops for break even. Once you see rejection, you close it and put stop orders for continuation. So you can see this big ass rejection candle, so that'd be a decent time to close. Even after this engulf, price pulled back, made this big ass wick, so that's another time to close. So you have two entries that you could have closed on, but worst possible case scenario, you put it to break even. And keep in mind, this is only one pair, so I'm only going on GA over this pair. I mean, for this video, I'm only going over GA, so it's like you gotta realize different pairs move differently. So, but like even like I don't trade GA, but like the fundamentals work. The fundamentals and technicals are similar, so it's similar to DJ's or GBP. So that's why I can trade them as well. But overall, I prefer other pairs because you can see this is not as clean, right? The move doesn't have a full continuation through. Maybe it's in a consolidation zone, whatever the environment may be. But yeah, let's go to the next example. All right, so you can see I drew the fib from the bottom to the top once again. So this is a decent example for 50 fib. So you can see price came to 50 fib, boom, it made like an engulf, and then broke above. So you could enter somewhere on the pullback over here, but this is not that clean of entry. Well, another thing this trade is it's a double confirm, right? So you have your ABCD, but it's also reverse head and shoulders. You can see the shoulder over here, head over here, shoulder over here. So you would have like a double confirm, which would make this 50 fib valid. So you could enter it off maybe the pullback somewhere here, and because this would be a risky entry, because I likely would expect this supply area to get tapped, but it did not because of this right shoulder. So there's already lots of liquidity here from this right shoulder, so it didn't need to come all the way below. And you can see you could just catch this zone right here. And then another thing, just looking, I didn't draw it yet, but just off the top of my head, you can see like suppose you miss this first leg and the second leg formed, right? So you can draw a fib from point A to point B, and you can see this comes right around the 51, maybe the 50 or 61.8 level, also around this key area. You could draw like a line across here if you really wanted, and then you can see this price breaks, makes this doji exhaustion. This is a beautiful entry, and then even if you miss this morning star forms, you can enter it off on the pullback handle right over here, and this would have been a continuation move all the way up. Yeah, let's just keep it moving. So yeah, I was analyzing that trade as well. So you can see also from these wicks, you can see this is like a very valid demand area because price failed to break below. So there's lots of liquidity, lots of volume being done here. So you can see this is a valid demand zone. So once price came back, right around the 61.8, right around the 50 fib, it exhausts. So this is a beautiful area, beautiful entry right here, and then straight to the moon. And I think that's about it. Yeah. So yeah, and a way to capitalize on this trade, a way to capitalize is by trailing a stop. So our target's at 1 to 5, but you can see price keeps tapping the EMA and flying up, tapping the ADMA and flying up. So you can keep on extending your TP and moving your SL below structure. It flies up again. Move your SL below structure. It flies up again, and you just keep that pace up, right? And yeah, it is what it is. That was the video. If you have any questions, let me know. And I'm just gonna end it here.